Hello, hello, hello. Mike Arnold's here, co-founder of Bat Trading Partners, along with Bob Iaccino, who we will bring on shortly. How is everyone doing? Hello, Ken. Real quick, let's get the housekeeping stuff out of the way before we bring on everybody, the only person everybody wants to see, Bob Iaccino. By the way, if you're new here, please do consider subscribing, ring that bell, hitting the like button. Longer term viewers, please leave some comments and some likes. By the way, tomorrow morning, not much going on. Wholesale inventories is the only thing. And then we do have the rig counts for oil. Other than that, heat map, pretty choppy day. Something slightly green, something slightly red. Still healthcare doing pretty well. So that's something to keep an eye on. Consumer defensive also doing pretty well. FOMC looks like we're sitting at 82%. And the gamma flip area is still in slightly in negative territory, but reversing the move again, approaching back to that 45 levels. So now that we got that all out of the way, let's see if this works. Ha 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 ha! One click button. One click button for Bob. There we go. Can we hear you, Bob, or are you muted? Or
every time I come on, you go, let's see if this works. I think you're feeling underconfident.
Well, no, I have a button now assigned to you. I have a.
Oh, nice.
You've earned yourself a whole button.
I like it a lot.
You know, it's not anybody that, this means I can push your buttons.
That's very exciting. You could always push my buttons, Mikey.
So more like one click, Mike. We've missed you, W Browser. We've missed you. Haven't seen you in a couple weeks. Hope you're doing well. But you are back for Bob Iaccino. Bob, what are your thoughts on what's going on? We haven't seen you since last week. You obviously got a lot to talk about now. We've seen you tweeting out all your memes or all your.
Oh God, those are ridiculous.
What so is going on?
CoinDesk, which is that's not the exchange, right? No, it's a publication. It's a crypto publication. So I used to appear on a podcast, Seeking Alpha's Alpha Trader podcast, every month or so. And what the hell's that? So anyway, the one of the guys who was one of the hosts, there were two hosts of the show, he left and went to CoinDesk, and he reached out to me and he said, hey, I'm going to CoinDesk. Can I have my colleague reach out to you every once in a while for some comment from a typical market participant on crypto? I'm like, yeah, sure, why not? So her name is Helene Braun. She's actually a very nice, good writer, very nice person. Anyway, she reached out to me for my comments on Dogecoin rallying because Elon Musk is at Twitter, right? So I said, first of all, so she put the gist of what I said in the article. But what I actually said was, first of all, we have no confirmation that he owns Dogecoin, none at all. He doesn't have to disclose that like he does his 9.2% stake in Twitter, right? He doesn't have to disclose how much Dogecoin, if any, he owns. Second of all, usually when he tweets on Dogecoin, it rhymes, which just brings up the silly factor to me. And third of all, he's in an even worse position to pump things up through his Twitter account than he used to be when he was only on the board of the company he was pumping. As opposed to now he's also on the board of Twitter. So it puts him in like a double-barreled crosshair if he's using Twitter to tweet things about, hey, Twitter is now there's rumors going around that Twitter is going to make Dogecoin their exclusive monetizing tool. That was one of the ridiculous things that was put out there. So anyway, I said he's even under more scrutiny now than he would have been before if he's using Twitter to pump something up. And somebody made a meme of, I don't know what Burr is. I don't know what BRRRR is. It's something crypto, one of these silly crypto things.
I know Burr from all the memes with the Federal Reserve with money printer go Burr.
Well, with money printing, it's the sound of the printing.
The Burr.
Yeah. So the first meme was my quote next to a picture of me with my last name spelled wrong. Um, and then it said, this is what Bob says. Then Elon Musk says, brr. And then it said, don't be like Bob. And then somebody underneath said, fire Bob Iaccino. So I don't know who's going to fire me. You could, I guess, Mike, but
You're
it was
fired.
funny. Well, I'm still going to work. So I put in there, I go, first of all, this is fucking hilarious. I love the image. And then I retweeted it. And I said, I think you guys should keep making fun of me for sure. Sean, Elon stating in the past that he owns Doge, Bitcoin, and ETH is also, I mean, he also stated that full autonomous driving was going to be ready 2 years ago. So I'm just telling, I'm actually not critical of Elon. I'm really not. I don't dislike the guy. I think he flouts SEC regulations way too much, but I don't necessarily know if what he says is true or not. He may have bought Doge, pumped it up, and then sold it. You know, he stated in the past that he owned it. Has he stated in the recent past that he still owns it? Don't know. He could be another Chamath Palihapitiya who said he would never sell Tesla on a CNBC, and I still have that link, that interview linked my Twitter. I have it pinned. An interview where he said, I'm never going to sell Tesla. And then like 3 weeks later, he had to disclose that he sold all his Tesla shares. Right. So I just don't know is my point. Anyway, he's going to be under more scrutiny. And that's what I put. So these guys they made memes of how dumb I am. And I said, these memes are great. I said, please make more and please keep making fun of me. And then I said, by the way, I own Doge, which I did buy some yesterday. I own Doge, and it's not because Elon is on Twitter. So now they were all like, Bob's great. And then I said, somebody please make a meme of Will Smith slapping me. Well, they did. Now, when I said, please keep making fun of me, I think it's hilarious. One of the guys who actually said, Bob's a really good guy. I'm not sure if this interview actually happened. And I said, no, the interview happened. That's actually what I think. I said, but please keep making fun of me. I think it's hilarious. And the guy, in a very civil, friendly kind of way, said, be careful what you ask for, Bobby boy. And then they just started making these GIFs and memes with my face on them. And I actually think they're hysterical. I really do. I hope they keep doing it. I can't figure out how to download the actual memes. So if anybody knows how to do that, go to my Twitter profile. I retweeted all of them. I just want the actual memes so that I can post them all over Twitter myself. They're hysterical. I love them. Whether they're critical of me or complimentary, I don't even care. They're hysterical.
Yeah, you have a lot of them. You
I don't know
do.
who Tim
It
Heidecker is.
filled up a whole. I mean, here you go. You're riding your rocket ship. Let's see what else. So
These
here
are
you go with
fantastic.
the
There's Elon actually
oh,
slapping me.
Elon slapping you, huh?
Yeah.
Oh boy. And don't get me started on him.
Don't get Mike started on Chamath.
Don't get me started on
No.
Elon or Shamath
Oh,
because
Ted, I hope I'm trending. That'd be huge. Put more up, Mike. Those are funny. It looks like you know how to at least grab them. Oh,
uh,
there's me driving by in my classic, my
we got that one.
'64 Impala.
We have I'm a chill.
It's I'ma chill,
I don't
not
know how
I.
to say it.
It's I'ma
That's not an
chill.
animated one. That's just you getting
That's just
slapped
me
by
getting
Will
slapped by
Smith.
Will, which is the first one. There's one of me dancing in like a red sweatsuit
That
too.
one.
Yeah, I love these. They're hysterical.
And then we have this one.
Yeah, that might be
So,
my favorite.
so you are now trending.
I love them.
So you are world famous. Have you put path trading on the map?
I'm gonna go back to these guys in a couple of days and go, hey, make one of me with like Megan the Stallion's body, um, doing wet ass p word or something. I don't know. I just they're hysterical to me. I freaking love them. And the first people were trying. I don't know if they were trying to upset me or what, but you can't upset me on Twitter. It's silly land. It's ridiculous. I don't care what anybody says about me on Twitter.
All
Doesn't they're
right.
just ridiculous.
So now we got that out of the way. What are your thoughts on the markets?
Well, I think this is another little dead cat. I mean, I don't want to name all of these as, each one is a dead cat bounce, but this isn't even really a bounce. The last couple of days, volume actually increased a little bit today, which tells me over the last few days it had been decreasing, but which tells me that it's more the buy the dip crowd. But I just think, man, rates are flying. One of the things that Amelia Bordeaux said that I actually found to be compelling on the Futures Edge podcast, which is on this channel, if you want to see it, she said that she doesn't worry about the curve inversion because rates are going up while it's inverting, so she doesn't think it'll last. And she turned out to be right. On April 1st, the 2s10s yield curve, April 1st, was -6. Today, it's +19. Okay, so the yield curve went from the 2s10s, which is an important one, went from -1 to positive, what did I say, 19? I think
19.
it's positive 19 today.
It's roughly 19 and a half.
Okay, so that's a big move in a few days. Now, again, this really leads me to believe that, again, it's another one of these buy the dip things. Okay, the 2s10s when inverted, we now don't have to worry about that anymore. But as these things continue to build, and as they continue to be like, okay, we don't have to worry about that, you have to worry about it even more, in my opinion. It turned out that she was right. It was going to reverse. But the normal path of rates when the Fed is hiking rates is a steepening yield curve. So this is just a normal path. This doesn't erase Fed rate hikes that I think are going to affect the market. And I still believe if the Fed thinks they're going to steamroll 7.9% inflation without affecting the overall economy, I think they're just dreaming. Now, when you put up the Fed Watch tool, that was 25 basis points, is at 78%. I didn't even see 50 basis points on there.
Yeah, 50. This is to 50.
That's to 50, 50 to
Yeah.
75,
This 20
75 to 100.
because
Oh,
we're
I see.
right.
Yeah, we're at 25 to 50 now. Okay.
Correct. So this would be
Yeah, yeah, yeah.
one. This would be a 25 basis point. This is a 50 basis point.
Yeah, you're right. So looking at it from a perspective of what's going to happen with the Fed, if they do a couple of 50 basis point rate hikes, they talked about in the FOMC minutes how much they're going to reduce the balance sheet by. All right. It's a maximum of 95 billion a month starting in May. That doesn't mean they're going to do 95 billion in May because they're not actually selling assets. Okay. They're just allowing assets to roll off as they mature. So they will stop it at 95 billion. So in other words, if on any given month it reaches 95 billion, and by the way, they're separating it 65 billion in treasuries, and I think it's 30 billion in agencies, MBSs, and other assets. They will then buy to cover the difference. If there's ever a month where, let's say, 100 billion is going to expire, they'll buy 5 billion in assets to cap it there. So in other words, that burr sound, that's the money press, is actually slowing and potentially going away. And the market's been on a sugar high of money printing for so long that when May starts, Mike, can you put up a Fed balance sheet?
Yeah, hold on.
It will actually decrease the size of the balance sheet substantially. Interest rates will be rising and money will be coming out of the system. Now, the economy's still strong, but not as strong as it was. Labor is the strongest part of the economy. And if companies, and labor's lagging, and if companies start losing access to capital because rates are high, which some of the companies with credit lines that they pay their employees with will start losing it, they'll start laying people off. And then it's just a cascade of things. You can see the balance sheet is kind of flattened out, even though it's still growing over the past weeks, right? This is ready for a downturn. Now, also, if they were to actually reach 95 billion a month, let's say they got to 80 billion a month, you're talking about $1 trillion in a year. That's not insignificant. That's now considering we're at what are we at now? 9 point something trillion.
We're just below 9.
Okay, so 8 something trillion. Coming down to 7, I mean, it sounds ridiculous, but that's still a lot of money coming out of the system. So I still think the market hasn't quite priced in the effect of this. And you won't see it in this month or this quarter's earnings. You'll see it start to see the inflation effect in next. So this sort of sideways lower with these little bear market rallies could continue for a while.
Okay, well there we go. So they've been really on tour the last couple of days with all their speeches.
Mm-hmm.
They just like to hear themselves talk, I think.
Oh, they've been at speaking aggressively. They really have, and you just don't hear that. I will tell you something in response to. I know there's a lot more comments there you want to go through, but what Rich said here, over the last 2 administrations, meaning Yellen and now Powell, they've actually, if you listen carefully, they've done what they said. And they've warned you if their path is changing, pun intended. If their path is changing, they have put out warnings to the market. And that's really different from the days of Volcker and early Greenspan, where they didn't say anything. You just had to figure it out. They didn't say shit. Literally, I remember when the M3 and the M4 figures, that was a big release. It was in the afternoon. Because when those numbers, that was Volcker's way of controlling or of managing the Fed's positions and interest rates. Money supply. And that thing would come out at like 1:30 or 2 o'clock. I don't remember the exact time. And it was a big deal, right? Greenspan was the one who started communicating, and then he was poor at it. Bernanke continued it. And I would say that Yellen and Powell are much more clear on this is what we're thinking about doing. Now, you still use a lot of cryptic language, and I think that just gives them the opportunity to pretend they're data dependent and change things. Data dependent to me just means where asset prices are. Doesn't really necessarily mean data. It's where asset prices are relative to data. Data is like the secondary concern. So I would say you might want to pay attention to what they say recently, Rich. That's what I would say, because what they say recently is what they tend to do lately.
What are your thoughts on crude now?
Crude's interesting because crude now is turning mildly bearish, right? I'm waiting for that breakout there. I think that's what, 93.53? That low there, Mikey?
93.53, yes.
Yeah, if I got to close below that, I'd probably like to put on a short position, but I don't like the target. So it would be more of a speculative position than a Mike approved position. I like the short side more, but right now I'm sort of neutral on it. It's an interesting thing developing in crude oil. So there's a phrase in the physical crude oil market. That phrase is plus pipe. Physical crude oil is priced at either a discount or a premium to WTI or Brent, depending on who's buying it, plus pipe. Okay, so the refiner that buys it, the end user that buys the crude oil, pays the shipping. And that's what plus pipe means. Now, plus pipe refers to pipeline costs. It refers to rail car costs. It refers to tanker costs. Okay? Tanker costs are 5x what they were at the beginning of the year because of the sanctions. Russia has a very heavy fleet of tankers. And because Russian crude oil is being turned away, on the one hand by sanctions, on the other hand by private companies just not wanting to do business with them. So Russian tankers used to come to shores full, and they would pick up loads and be chartered back towards some other destination. And now those tankers, that's not happening with anyone except really China. And China doesn't produce much oil. So those tankers have come out of the market. So tanker rates are 5x right now. So that's going to affect prices at the pump, but not necessarily the price of crude oil. Okay, so what you might start seeing is the shape of the crude oil curve changing a little bit, because it's likely to still hurt demand, even though you see crude oil prices ticking down here. And people are going to expect it to immediately affect the price of the pump. There's two things wrong with that. Number one is oil companies don't own gas stations. Okay, so they don't really set that. Well, there's actually three things wrong with it. Number two, I should probably keep the other half finger up when I do this, right? So number two is prices at the pump. The gas stations buy a month, 2 month, 3 months worth of refined product. So they've already paid that price. So they can't lower prices just because crude oil prices have dropped. They've got to leave it at the price. They bought it at a certain price and they still need to make a profit. So prices at the pump don't come down. There's been studies done that they actually lower prices even slower than that equation would deem that they should. And that's them making up for another time where they bought prices higher and then prices went down, right? They just kind of keep it high to make a little extra. But then the competition starts between gas stations. Those are the times you actually see big differentials between different gas stations. And number three, this plus pipe equation. So crude oil prices might be going down, but if you're paying 5x for the shipping, the price from the refinery is not moving much. So there's a lot going on with crude oil. Crude oil itself, I favor a short position now, but I'm not putting one on until we get below 93.53 and we see how price reacts.
And then we'll get to some Rich as Biden now wants more of Canada's oil. Well, boy, I wish we had a pipeline for that. But that's another topic. Okay, back to the, let's see. Sashi, increase in rate to 0.5. I think you mean a 50 basis point rate hike in May affects the market. How and why people need to still invest in good companies anyway. So how does the rate hikes affect the market?
Well, the fact that this first 50 basis point rate hike is priced in, it doesn't affect it that much. What the higher rates affect markets, when you say people still need to buy good companies, they don't always buy good companies. Mike knows that better than anybody, trying to spend a lot of his time convincing people that they should buy good companies. So for people in here that follow Mike closely, yeah, it doesn't really affect you that much. But when you have companies that go to the public markets for financing, their financing is now more expensive. And when you have smaller companies that are in the Russell, and some larger companies as well, but mostly smaller companies, they provide product, they have accounts receivable, but they have bills they need to pay now. And they go to either the public markets or to the banks to get lines of credit to pay their own bills and to pay their own employees. And that rate is now higher. So it squeezes profit margins. So that's really the effect. But you're right, Chashi. It's if you're following Mike, you don't have that much of a worry in terms of good companies versus bad companies.
Sterling asks, are all the reverse repos that are happening a piece of QT? And if so, how does it affect liquidity in the banks and financial markets should there be a consumer credit issue that arises?
Let me read through that one again. Are all the reverse repos that are happening a piece of? No, they're not a piece of QE. Reverse repo is a normal Fed operation. Okay. Essentially, I don't really want to go into what it is because you don't need to know what reverse repos are. The only time it's part of QE is if reverse repos get out of whack and rates start climbing on the reverse repos, then the Fed generally comes in with money to assist in the process, but it's very short term. It's operational. It doesn't matter that much.
Do you still have a 38 to 44% drawdown, and will it happen this year or next? And that's referring to the S&P.
I do. I still think that's the target of the downside. And honestly, when I said that last year, I didn't think it would have begun yet. I really thought it was a late Q2, early Q3 phenomenon. It might still play out that way. I just think the fundamentals line up like that, but it doesn't matter if the price action doesn't.
What are your thoughts on the loonie?
I like it because I like crude oil and I like commodities. So when you look at the structure of the central banks, right? The only central bank ahead of the U.S. in tightening is the RBA, Reserve Bank of Australia, which has their Fed funds rate at 1%, and the Bank of England, which has it at 75 basis points, which is 0.75%. In case you guys don't ever know this, I talk in basis points a lot. 100 basis points is 1%. So 50 basis points is a 0.5%. Okay. Anyway, when we get this 50 basis point rate hike at the next meeting, which I believe is in May, we'll be even with the Reserve Bank of Australia and above the Bank of England. And then if we get one more, we'll be ahead of all of them, which lends dollar strength. And the Bank of Canada had started rate hikes, right? At least they implied that they were going to start rate hikes. And they basically, I believe they did one and stopped. They're at a 0.5% right now on their overnight Fed funds rate, or the equivalent of their overnight Fed funds rate. January, they raised 25 basis points. Then they stopped, which I thought was strange because their inflation it's run away like ours is. So, but I like the Canadian dollar because it's a commodity-based currency, and I think the Bank of Canada is actually going to pick it up. They're going to pick up the pace. That's my honest opinion. So I like it. I don't necessarily like the chart pattern right now, but I think it's going to go up and it's going to start putting on more bullish patterns.
All right. Not seeing anything else. Do you have anything else to discuss with anybody?
No, tomorrow's kind of a dull day. We do, on the case of the loonie, we do have Canadian employment figures tomorrow, which will matter quite a bit to the loonie. So keep an eye on that. And other than that, no, there is let me look at something really quick. Yeah, earnings season begins next week. Watch the guidance from the banks, not the actual whether they beat or exceeded or this and that. It's the loan numbers, and in their guidance, they'll probably talk about loan origination in the future. Mortgage applications are down 40% in March. Home mortgage applications down 40%. That's a big number. So watch for that stuff next week when we get those on. I think it's on Wednesday.
Here's a question.
Yeah.
Bob, when rates are going to be hiked, BAC, JPM, Bank of America, JP Morgan will benefit. Why has it been going down for 10 straight days?
Well, the mega banks, Shashi, the mega banks, it's more complex than that. Yes, that is absolutely true. I want to look at a chart while I'm talking to you. Oh, you got one up.
That's Bank of
See that green handle there? That one green up candle right there?
which here's JP Morgan. Where do you want?
JP Morgan's fine. See that one green candle in these last 5 or 6 sessions?
This one?
Yeah. That's probably April 4th, right?
Yep.
Okay, so April 4th was the first day. Let me just double check that I'm right about this. April 4th, yeah. April 4th, the 2s10s went from -6 to -1. So an inverted yield curve, even with higher rates, is not good for the banks. Okay. A yield curve that's correctly shaped with higher rates is good for the banks. So you're likely going to start to see the banks stabilize, which I think they probably are stabilized here at those lower prices. You still have the issue with these bigger banks of loan origination and some of the other things going on in the economy. But yes, all else equal, higher rates are better as long as the curve stays shaped like this, okay? Where this is 2-year yields and this is 10-year and 30-year. If it goes like that again, that's the reason it was going down, is because of the inversions across the curve and the continued inverting of the overall yield curve. So that was the reason it was going down. I suspect it's stabilizing here. But if you look at regional banks that are all basically reliant, let me pull one up here. What's a good regional bank to look at, Mike? What's Fifth Third signal? That would be a good one. BB&T, I know, got bought. That used to be a good one to look at.
I forget. I don't look at.
I mean, you can just type it in here. Fifth Third Bank Corp.
What's
That's still going straight down, so they're worried about loan origination with that.
what's their symbol?
Fifth Third?
Yeah.
Ah, crap. I just lost it. Hold on. Because I just changed to the XL left. The XL left. XL. Why do I keep saying it like that? Fifth Third Bancorp is FITB.
Thank you.
Oh, it is TFC now, isn't it? What's TFC? That's a different one. That is Truist. Yeah, those are getting hit as well. But again, you look at where there was a little rally. Go to TFC. You look at where there was a little rally. It was when the inversion started to go away. Right?
And then they got hit again.
April 4th, April 5th. But then you have the issue of loan origination dropping. So that's really what it is.
All right, we got a couple other questions here.
Sure.
Bob, I'm going back to the go forward here. Last week you said you sold your BTC position, but today you bought Doge. What's the thesis?
I bought Doge yesterday, honestly, because I commented on it. That's the thesis. True story. I commented on it, and it was funny. It was before all this Twitter shit began today. There's no other thesis to it. I'll see how it does, but I'll likely get rid of it. I don't personally believe in Doge. I don't know enough about Doge to believe in it. Yeah, I should blurt that out. I'm not necessarily a Doge backer. And it actually came in handy today because I said to the people on Twitter, they're like, Elon, Doge, he's Twitter now. It's Doge. He's going to turn, they think he's going to turn Doge into the currency of Twitter. And first of all, he doesn't have that power by himself, right? But anyway, from a perspective of why I bought it is because I spoke on it. And I wanted to be able to come out and speak responsibly and say, look, I own it. So this, and I still think he's not going to be able to do anything about it. But I don't think I'll hold it that long. I don't think anybody should buy it because I did.
But since you're trending, you're a meme trending, you know what? Doge to the moon.
Yeah,
Boy.
I don't want to get to the point where I can move this stuff. I don't think that's what's happening, but I would have a hard time, and this is being recorded, so I'm being honest. I would have a hard time doing it on purpose or not doing it on purpose if I actually had the power to move something. So I really hope that doesn't happen.
Sterling again. Walmart and Target both rocketed up today. Walmart sold off more and closed after hitting all-time highs. Any macro reasons why?
Why Walmart rocketed up more?
Or
is that the question?
Why, I guess, maybe why, what's going on with Walmart and Target? And why
honestly, I don't.
They're going.
Look, go ahead, Mike.
And why they're like, what's the macro behind? I mean, Target's breaking up of a really nice horizontal channel. Walmart to new highs, straight up to the harmonic right here. What's the macro thesis behind their strength?
Well, let me ask you this. Take a look maybe at Dollar General and then take a look at one of the luxury brands. I hadn't actually seen this, but if Dollar General is also... Okay, now what about some of the luxury brands? What can we look at there?
What's Tiffany?
Good question. I'll find out right now.
Why is it not get? Why can't
I'm not showing Tiffany.
All right, what's another bro? I don't know.
Who owns Louis Vuitton and all that? There's a company.
Don't ask me. I'm more like the Walmart Target shopper.
Well, there you go.
With my fancy clothes, with my fancy wardrobe.
There's a luxury brand maker. What's that?
MVH. What is going on?
I have a theory, but this will help me.
What's a luxury brand? What happened to like stuff? I thought, Now I'm blanking out. Give me a luxury brand.
I'm not blanking. Let's try. Well, look, let's just look at, let's see. That's OTC. I'm not looking at that. Let's do LVMH.
Oh, that's an L. That was I thought it was an I. Okay, LVMH. What is that?
Lower, right?
LVM. Yes, that's
Okay,
breaking. That
there's your thesis. There's your thesis. Discount shopping is going to become popular because people are going to be struggling with inflation.
what is LVMH?
LVMH is the world's biggest luxury brand: jewelry, watches, bags, leather
Got it.
goods.
Got it.
So the thesis on that, then, who asked the question?
Yep.
Sterling?
Sterling.
Yeah, the thesis on that is they're not getting inflation under control, so luxury brands are going to suffer both with input costs and the discounters are going to be doing better. That's the thesis. I don't know why it would specifically happen today, but that would be the thesis I'd give you on that. And to me, it's confirmed by the luxury brands getting hit and the discounters, especially your Dollar Generals and your Dollar Tree. I bet your Dollar Tree was through the roof as well. That would be the thesis
See,
behind it.
look, I know all those symbols by heart.
Yeah, those you like.
That's coming off a really nice rotation setup. But hey, I mentioned Restoration Hardware the other day. Thanks for typing that in, Rich. That was the gap play, which completed nicely.
Yeah, another luxury brand, right?
Yep, that was the gap fill play I talked about.
The
Yeah,
only one I would say is probably not getting hit is Ferrari because money is no object for people who buy Ferrari.
no, that's probably one that's hanging in there. So, where else? The new Twitter hashtag Bob the Baker cooking up the cryptos. There we go.
Nice.
What's your thought on the euro? Is it going? It is going down despite hawkish ECB minutes.
I think the euro is going to struggle, quite frankly. First of all, because it's the main pair traded against the US dollar, and the dollar to me is looking still strong. We're at the highest levels in dollar since I believe mid 2020. If you're looking at the dollar index, for example,
Dollar index.
the ECB. So look, if you just take a cue from the FOMC minutes. Okay, the Fed basically said in those minutes, I'm paraphrasing, we would have done 50 if it wasn't for Russia, Ukraine. Okay. Now that they see that Russia, Ukraine is, I don't know that it's not affecting the economy, but they're willing to do 50 now anyway because it's actually pushing inflation higher. Right. It's not affecting the stock market maybe as much as they would have thought. Oh, they don't look at that. I'm sorry. Never mind. Anyway, Europe has big problems with Russia, Ukraine, not the least of which being energy. So while the ECB minutes were hawkish, what was the date of that meeting? It was either early on or maybe even pre-invasion. I think it was early in the invasion. They're worried about inflation, but they really can't do that much because their economy is already going to suffer. Their gas prices are up a stunning 177% across Europe, and it's up a lot higher in a couple of others, a couple of individual places like Norway and Finland. So very, very difficult situation for Europe, and I just don't think they can be as hawkish as they said in the minutes. To Rich's point, right? Rich doesn't believe what the central banks say, only what they do. I'll also, by the way, say the ECB has been a lot less reliable in terms of doing what they say. But that's to your point, Rich, right? They have to back off that, I believe, and I think the euro is going to weaken because of that.
Is Tesla going to behave like Ferrari? Will demand for the cars keep the demand up for the stock up?
First of all, do not put those two in the same sentence ever. Ever. Those two
You're
do not
Italian,
belong in the
Bob.
same sentence.
That's like, come on.
Oh, I mean, I'm all about American cars. Don't get me wrong. We have a Mustang and a Blazer. We have a Mustang, a Chevy, or I'm sorry, a Ford Mustang with the V8 in it, and we got a Chevy Blazer. I'm all about the American car, but do not put those two in the same sentence. No, I don't think so. Tesla doesn't stir the emotions like a Ferrari does. I think those are two different things. I mean, I guess it does for some
Hey,
people.
Ferrari's doing well in F1 this year.
Yeah, they are. They really
I
are.
mean, you
You're
should be
surprised
happy.
they don't.
They've come back from getting their butt whooped, and now
Yeah.
they're
Mercedes Benz and McLaren was really handing it to them. I thought McLaren was going to do a lot better, but
well, Mercedes the last few years has been on a tear, but now you got
killing
Ferrari stepping up, and Red Bull's back. Red Bull,
it.
baby. Red Bull with the F1 team, they were down the dumps. Well, I can't really say the dumps, but they were hurting it for a few years, and now they're back. So
Ted
we got.
Chambers, you and I are officially in a fight, just so you know. We're
Uh
in an
oh,
argument.
Ted. You don't put Tesla with Ferrari in the same sentence, okay? Just don't do that. Don't do that. And Tesla's a Chinese brand, by the way, so it's not American.
Yeah.
It's owned by
Tesla stock is just different. I don't
That's an
talk to Mike about
understatement of the year.
talk to Mike about Tesla stock. I don't. It's not for me.
Yeah. So anything else before we wrap it up? Then I'll give everybody, if you want to stick around, some thoughts of what I'm watching for overnight. So we
Nope.
can let
I got
Bob
nothing else.
go.
Just follow me on Twitter and try and put our podcast on in the background and walk away. Just get those numbers up.
All right. Well, there you go. Then we will see you next Tuesday.
Yep.
All
Cheers,
right.
guys.
All right. There we go. There's no need to be sorry, Ted. It's all fun and games. Tesla haters love to hear the bear thesis. What's the fair price for Tesla stock? Well, I'm going to put it this way: it's not worth more than the other 20 automakers all combined. The top 20 other automakers combined. So there you go. Let's see with the markets. Well, Ted, you can't put Ferrari in with anybody else for an Italian. So there we go. You can't do that. Can't do that. It's all fun and games, though. We're just joking around. Got that nice snapback little rally today, finally. That's what I was talking about this morning with watch if it broke down, watch, to suck people in. And then you got momentum bars. Here's a nice little thing with the momentum bars. Again, I get questions about this all the time. Here's a really nice 25% retracement holding up with the momentum bars from the low bar of the momentum bars, and then you get the rotation back up. I love that to jump on, even if you wait for it to break the most recent highs. Love that with momentum bars, and I was watching for that. Once we got those momentum bars, we broke down, started the breakdown, sucked people into the short side, and then rocketing out the other side. And then really nice at the end of the day, this really nice double top pattern to take off profits. So we'll watch for that to complete tonight. What am I watching for tomorrow? Again, we had that 4-hour aggressive buy earlier today. I'm watching for to see if this can get some continued follow through. Tomorrow might just be a sort of a day because of Friday and there's not a lot to move the markets. But next week, definitely watching for some more upside follow through. And then we will see about when and where we can establish a longer term bearish position again. Wanted to see this bounce up off of there. If it does roll down, we still do have the head and shoulders still technically in play. So nothing else has changed there. Nasdaq, little weaker here, but coming back down to the second target from the double, and then you have the momentum bars here again. Your one little pausing bar. Here's your momentum bars on the Nasdaq. Remember, there's your pullback. This was a little weaker. I like to see a base above the 25% or return to 50, 62, and then a rotation back up. This had to wait for the rotation back up, then a breakout, retest that area, and then you got the momentum bars coming in again. Another double top pattern. For, again, this wasn't looking to short. This was take profits off the table. First, second targets already hit. Just going to leave that on for the minor targets. Nasdaq still behaving weaker, but tomorrow watching it again about 14, about 580. There were no great buy patterns in today. There's only one that earlier with the S&P. Dow holding up the best today. I mean, I'm talking over the last few days, dipping below the support, but then also reversing. Again, we had the breakdown in the Dow and then the quick reversal move. This was a picture perfect, what I call the shake and bake pattern. You get people in, people getting short, and then reverse move back through the center of the channel and out the other side. Love that pattern. Absolutely love that pattern. Why? Because it gets fuel, people getting short. All right, then holding right here, then starting to get up, and then they're realizing, oh crap, I got a cover, which rockets the other way. Just love that pattern, hitting the first horizontal channel target up there, and now returning to the breakout zone. So I'm still watching for a rotation back up in the Dow, especially tomorrow. That will be could be a really nice play. Nothing much going on in crude. That double of watching earlier never got the close above it. And remember, if you're trying to trade it shorter term, let me just show you. You see here, tried to poke above it. I talk about catching on there and then rotating back up. Dipped down, tried to get up, could not sustain above that level, then a little mini double top, and then never retested that level. That's why we didn't get any key strength. So if you're going to try to play that on a shorter term basis, you really want the break above, the retest, and the rotation back up, instead of a break actually below the peak, a move back up to create a double top, and then confirming that. So there was just nothing going on in crude, and I still don't have much going on in crude. I can see, yeah, you might have a little short-term short if it does break down below here. But my major thing would be it's still holding at the upper end of this channel. If it does break into the channel, then I'd barely be watching for a return to 84 longer term, but that would be a struggle and nothing I'm going to do. Notes, still watching again. I talked about the Elliott wave pattern, still watching for a longer term bottom to be put in, and it can happen within the next week or so in timing. So that's what I'm watching for right now. Tesla, by the way, I talk to people, you don't have to catch every move. Coming down, there's buying pressure in front of the full gap, but now there is this potential double bottom here. And you still have a gap to the upside. So that could be, if there's strength tomorrow, that could be an interesting play to the long side in Tesla. Above 1076.50, because then you have the gap fill magnet. You also have your gap harmonics. And you see closing above there earlier, closing above there earlier today. So that still does favor a gap fill, even with this little spike lower that created the double top. So I'm watching for the gap fill tomorrow and then a continuation play at least to 1100. But that needs to get above 1076 first. Just wanted to point that out for all the Tesla traders in here. We're dipping into the rotation zone also. And by the way, a daily close back above yesterday's bar high is a short-term aggressive entry based on how long this is. So if that triggered, I'd watch then for a pushback for a retest of just this high area. Let's see. There's your Tesla. Let's see. Apparently Bob has just invaded my western borders. The mystery bounce was funny. Okay. What else? I tried doing a channel break on Target in Discord. Can you do that so I can see how you do it? Looks like a double targets from the candle bodies. Let's see. So this, yeah, you're going to want to find, it's really finding a significant level within the horizontal channel. The significant level would be, that would be your upper boundary. I can tell you right now. You can see it right here. That's your upper boundary. So you're going to want to identify significant levels on both sides. If you're not, you can always go to the lowest candle bodies, but I like to find significant levels because that's what really propels it. And this one might be a little tricky. The lower end of the channel. Let's see here. That's close. It's going to be right there. There's your significant level. All right, so why don't we just use secondary? You can use highs and lows. It's just not as accurate because when you have multiple highs and lows, you measure from the highest high, lowest low. You use the most recent ones. You know everything. Significant levels actually still lend to stronger levels for the confirmation. And then it works out, again, just happens to work this way with the same virtual kind of stuff as the doubles. Because it's about the 50% level is your first target. I always like the 75% because it gives me an area to take profits on. And then any horizontal channel, the breakout is the full target is the 100% traditionally. Now this brings it in a bit because we're not using the most extreme high or low or the recent high and low, but this gives you a lot higher probabilities that all the targets get hit. And again, stop production. I like to do partial profits and then full profits unless we have a major runner. So that's how you do it. Those are your levels. About 208.80 and about 226.12. And again, you could go off 226 and 209. It's not, you're getting in a ballpark because, I mean, do I set stuff like, all right, 238.98, that would be a fine target for me. I'd probably go to 238.95. If something was at 238.03, I'd bump it down to 238.95. Okay, it's giving me a target area, and I'm going to use some common sense because I hate putting a target just beyond a round number because so many people have resting orders against it. So where does this invalidate is if I now go to the midpoint. This is also really good. If you go to the midpoint using the significant levels, that's the stop level roughly. Now on this one, I put it slightly below the gap fill. You see this little gap fill, but that's the area for the stop. You don't have to go on the other side of the channel. Why the 50% level? Because if you break out and then reverse beyond the 50% level, you're generally going the other way. So there you go. That's your little class on horizontals. ABBV. Yeah, ABBV does look a little overextended. Pharmaceuticals, upside, I wouldn't be chasing it up here. Wow. That's, wow. Yeah, I'd be watching for some pullback play and that would not be chasing that at all. CVX. CVX looks like accumulation. It does look like, there's some accumulation. You're holding a daily rotation zone, so it could easily be basing before a play higher. Still could not get that first double target, which means it's actually got a strong bullish bias when it can't get to the first target. I mean, I personally would like to see breakout above about 169.50, and then I'd use the harmonics to actually, I'd just target if you want to play this to the upside, I'd be constructing something like a call spread at this point. So, see it on the weekly. I mean, I'd really wait for it to break out since that double is still technically in play. I'd wait until it turned into a triple for my own trading style. So because it starts breaking up in here, it's then a triple top, and that favors slightly the continuation, and you have it basing with that daily rotation zone edging up. So that could be an interesting play to the upside. All right, I'll take a look at Nvidia, then we'll wrap it up. Nvidia broke the 200 SMA daily today. It did rally above 62.5% retracement for the most recent swing, but gap fill below from 325 along with weakness in the semiconductor. And Nvidia finally, we had this little head and shoulders, and it's now finished that full target. There's your full head and shoulders target right there. So that plays over. So now the downside pressure, at least from that, is out of the way. We have the gap fill play, which has to be ratcheted lower. Here's your daily, by the way. I mean, your 200 is an area. It bounced back right here. What I'm more watching for this, this could actually be a little interesting reverse head and shoulder move too. But I'd be watching for my play would be really to the upside gap fill play at this. If we have any more bounce with the Nasdaq and stuff, I know semis are weaker longer term, so nothing in the chip space is long term for me. But I'd really be watching for this upside fill play, unless we really break below the lows today. That would reset that pattern. But I'd be watching for a potential reversal play going into tomorrow and early next week, personally. It could be interesting. A little scoop up would be actually an inverse head and shoulder play. It's starting to form. It's still too early because could this come back down here? And actually, if it came back down here, it could be a potential double play. Where if it makes new lows, then your major support's right in here, about 234.40. Breaking below there, I'd be watching for this other gap that's slightly left behind. But other than that, I'd be watching for it. Now, right now, it's in no man's land for me. I'd be watching for a potential play to the upside. It's also got some percent B plays in. So yeah, I'm watching more for a little quick short-term bounce on this, and then another rollover play. Personally, cycles are at the bottom, RSI's at the bottom. Does that mean it can't go down more? No, but it's running out of some momentum, and it's got some bottoming tendencies right here. So that's where we sit. So that could be a little, I know you like to do some short-term plays, Rich. That could be an interesting little short-term play to the upside. Again, nothing yet. This is not something I just go, I buy it on the open. No, we got some patterns. We got the gap fill pattern. We got a potential inverse head and shoulders pattern. I want something to trigger. I'm not just going to go, I'm going to buy it on the open because it looks like it's bottoming. That's not a trade. That is not a strategy. So Warren Buffett, but then I'm going to wrap this up and I'll take a Warren Buffett. Okay. I don't generally follow what he does, but it'll be interesting to see if this maintains. It's got some pressure here. This looks like it's running out of momentum too. We got divergences, some really strong divergences. I'm going to be actually watching this for more of a rollover play. Oh, I did HP. I didn't know if you meant the stock or the company. So let me know about that. And yeah, you want HPQ? HPQ spike up. I didn't know if you wanted which you wanted. So again, put in. This is going to be a gap fill play for me. This is going to be a gap fill play for me at some point. Definitely going to watch this one for a gap fill play. What else do we have? Boeing still. You might have a aggressive buy as a close above today's high, but again, it would just be for a gap fill play and up into the rotation zone. Nothing else has changed yet. I don't think that closed below the 62.5 yet, did it? Yeah, well, you did actually. Yes, it did now. So anything to the upside would just be a very short-term play, unless it can trigger this bigger bottoming pattern, but that's a ways off. So if you're looking for, again, educational purpose only, I do have a potential buy signal stepping up on a close above today's high. Yeah, thank you, Rich, for the clarification. Finally, XOM, and then we'll call it a day. I'm running out of energy. XOM, never, we had this potential head and shoulders, which is never ever triggered, and that's pretty much off the table right now. So that never triggered, sitting at this harmonic. And your 62.5, I mean, XOM is sort of like CVX, like Chevron. You start getting moves above the 62.5, I'd be watching for the upside play. You still have a gap left behind here, so there's some interesting upside plays in this. Definitely some upside plays available in here. Shorter term above about 85.50 is a play, and then rolling it up with the gap fill play is an option. But that's it's nice build after its little sell off, building a nice base, breaking for some short term horizontal. That could be a very interesting play above this harmonic. Everyone, please come back and leave some comments on the video. Doesn't have to be long, just great TA. Not great TNA, great TA. You might actually want to spell out technical analysis. Spend the extra 30 seconds. Or just say, I love the shiny head, Mike. There you go. You are welcome, everyone. We'll do a session tomorrow morning based off, because we got that little bounce. We got that little bounce in the indices, so we'll take a look at the overnight price action tomorrow morning and set ourselves up for any good Friday plays. And if there's nothing going on, we're going to sit on our hands. What do I think about M? This is it. What do I think about M? I actually know. I don't recall looking at this ever. What do I think about it? I think it needs to base a little before I'd be interested in a breakout play. Especially where it closed. Spiking up. Let's see here. I mean, as long as it can hold, I would be patient on this. So if it can hold and let some of the rotation zones catch up and just do some sideways price action and base along this area, I'd be more interested on it in a breakout play. I would not be chasing this tomorrow. This would be longer term to watch, and if it backfills, that would be interesting as well. But right now, I'd be seeing if it can base above today's low and let some of this rotation zone catch up with 8 pushing the price, and then watch for a breakout. TNA, there you go. So that's it. I will talk to everyone later. Everyone have a wonderful evening. And by the way, come back and leave some comments. And if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back and leave those comments like Sterling.